Hello friends, in this video we are going to see and learn the types of invoices. These are the types of invoices which are given: aggregate invoice, sale on approval basis invoice, supplementary invoice, revised invoice, and the two types of notes, debit and credit note. Okay, let us start with the invoices. This one sentence is enough to say what is this. Aggregate invoice means it is sent for a group of transactions. Okay, there can be one transaction, 10 transactions, 100 transactions at a go, and therefore we can have only one invoice, that is called as aggregate invoice. And there can be supplementary invoices added to this aggregate invoice, and that is this supplementary invoice. Supplementary is as good as supplement added to the main invoice. Like in examination you add supplements to the main exam paper, right? So it is issued by a taxable person in case where any deficiency is found in a tax invoice already issued by a taxable person, right? This is another reason which is given, where any deficiency is found in a tax invoice. Let us say there are 50 transactions and we are issuing aggregate invoice. That is fine. We can have one supplementary invoice as well. Now I said 50 transactions. In one page you cannot add all 50 items, and therefore you can add the supplement to the main invoice, right? So 10 transactions per page, even if you write, it may take 5 pages, and 5 pages invoice is also fine. We call it as supplementary invoice, right? Then the sale on approval basis invoice means invoice becomes valid only when it is approved. Okay, it has to be approved by the buyer and then only the invoice becomes valid. Sale on approval basis. This is very common in manufacturing business and in construction business, because they have to check the quality of the inputs used, right? And then revised invoice. It is issued by a taxable person in relation to any invoice that is already issued by him. So if there is any mistake in the previous invoice, they can issue the revised invoice, right? Now there is a difference between revised invoice and supplementary invoice. Revised invoice may be issued when taxable person in relation to any invoice already issued by him. It means we are revising the invoice, we are rectifying our mistakes which was done in the previous already issued invoice. That is the revised invoice. Supplementary invoice, as I said, it has to be issued by a taxable person in case where there is any deficiency found in the tax invoice which is already issued by the taxable person, right? What is that deficiency? You may not add all the items, or you may have mistaken in the tax rate, or you may not have written the GST-II number, or there is any other such deficiency, right? Or even if it is not printed well, whatever invoice you are giving, even if it is not printed well, then we are issuing revised invoice. Hope this is understanding, right? So what is the period covered? For supplementary invoice there is no specific time, because you can issue it on the go, or you can also issue it after the transaction has taken place. But there has to be the main invoice issued to issue the supplementary invoice, right? For this revised invoice, the period starting from effective date of registration till the date of issuance of certificate of registration. It means that, in short, let me tell you, revised invoice can be issued anytime when you are in the registration. Okay, you can revise your invoices, but there is a time limit. Okay, but there is a time limit. You cannot issue a revised invoice after 4 years. No, you can only revise that within that financial year. Okay, so whom it is issued? Only to registered person you can issue the revised invoice. Okay, only to registered person. It means that the second person should be a businessman or the business, right? This is issued in B2B transaction, but supplementary invoice can be issued to B2B and B2C transactions as well. It means you can issue to unregistered persons as well, supplementary invoice, right? So this is the difference. Not much difficult, it is easy to understand, right? So we have seen what these many types of invoices: aggregate invoice, which is issued one at a go, right, for many transactions; sale on approval basis, when the transaction is approved by the receiver, then that is called as the sale on approval basis. And supplementary invoice means you are issuing this invoice in addition to the previous invoices. Revised invoice means you are issuing the next changed or rectified invoice. Okay, now let us learn what is this debit note and credit note. Debit note is issued by the seller and credit note is also issued by the seller. When, see, debit note is issued when the amount payable by the buyer to seller increases. After the transaction has taken place, the amount payable by the buyer, if it is increasing, then seller will issue the debit note. If it is decreasing, then seller will issue the credit note. Okay, this is the difference. Tax invoice has a lower taxable value than the amount should have been charged. This sentence tells it all. So tax invoice has a lower taxable value than the amount should have been charged. It means, so for lesser taxable value you are issuing a debit note. For higher taxable value you are issuing a credit note. Buyer pays more than what he has already paid. This is the debit note. Okay, buyer has to pay more to the seller, then only debit note is issued. When buyer refunds, he has already paid more, but it has to be refunded back to the supplier. In such cases, then it is issued credit note, right? Service provider has provided more services than what was agreed. In case of service provision, service provider he has provided more services than what was agreed. Let us suppose there is a singer and he has to perform in a concert for one day, but that performance was extremely good and people expressed gratitude, said that you have to perform one more day. In such cases he will charge more, right? But what was the contract was for one day, but he is giving service for 2 days. In such cases debit note is issued. Okay, and if services are found to be deficient, in such cases credit note is issued. Hope this is clear, right? This chart will give you more understanding. When there is, let us first understand increase in value. Okay, increasing value means say taxable amount is increasing or the tax rate is increasing or whatever. In whatever case, the purchaser has to pay more to the seller, right? In such cases purchaser will issue the credit note, but seller will issue issue the debit note. Okay, please understand, these things we are learning from the point of view of seller. It is issued by the seller, it is issued by the seller. That is why I said we are learning these two from the point of view of seller. Okay, so seller will issue debit note when there is increase in invoice value. If seller is very reluctant and lazy person like you and he is not issuing debit note, then purchaser has a right to issue the credit note. You may ask me, sir, this is increasing value, right? And purchaser is paying more to the seller. Why should purchaser issue the credit note? He has to pay more, right? He will receive sit quiet. I will tell you. See, purchaser, if he is paying more, what is he paying? He is paying taxes, right? If the purchaser is paying more taxes, purchaser is in benefit because he will get that much of credit from the government. Understanding? If the purchaser pays 100 rupees tax on the goods, and if he is a registered person, section 16, purchaser will get what? Credit of that 100 rupees. So purchaser is in advantage, seller is also in advantage, because whatever increase in invoice value he has seen, purchaser is paying and seller is paying it to the government, right? And government is giving back credit to him also. So that is how it goes. So seller will issue the debit note. He has to issue the debit note to the purchaser. If seller is not issuing, then purchaser will issue the credit note. This is in increase in value. What happens in decrease in invoice value? If the invoice value is decreasing, it means purchaser has already paid more. Now seller has to repay back. It means seller will credit the amount to the purchaser through credit note. Okay, and if he is not doing that, purchaser will issue the debit note. This is what you have to understand. If you have still not understood, I have brought one question over here. This question will clear all your doubts. ABC Limited issued a tax invoice of rupees 10,000 including taxes. There is a company ABC Limited. It has issued a tax invoice of rupees 10,000, and 10,000 includes taxes. Okay, to whom? To XYZ Limited. It means XYZ is the buyer. On 10th June 2021. Okay, this 10,000 was issued on 10th June 2021 with the invoice number. This is the invoice number which is given, ABC 2021-321. Okay, this is the random number, but this is invoice number. This is very, very important in the debit note and credit note, because every time debit note or credit note, they are issued only with the invoice number. Okay, with the reference of invoices only they are issuing the debit note or credit note. On 20th June, ABC Limited received a notice that on 20th June, what has happened? See, the transaction had happened on 10th June. Now, after 10 days, what is happening? ABC Limited received a notice that said with effect from 1st June. Okay, with effect from 1st June, the tax rates have been reduced on goods sold with this invoice. The tax rates have been reduced. It means taxable amount is reduced, right? Taxable amount is reduced. Decrease in value. This is decreasing invoice value, right? ABC Limited will issue a credit note to XYZ Limited. See, a seller is ABC, right? Seller will issue what? Credit note to XYZ Limited. Okay, using the reference number. I am not saying now the invoice number. This is the reference number, ABC 21321, the same number. Okay, I will go to the slide where I have shown you how it works. Okay, here it is. Okay, I will zoom this. See, invoice date is given here. Invoice number, in our case it is ABC 2021-321. This is the invoice number, and this is reference number. Now, because in this example it was first invoice and therefore no references were given, this reference number will be used in the revised invoice or supplementary invoice, or even in debit note and credit notes. Sir, what is there? What is the content in debit note and credit note? Contents are same, all same, where reference number will be the original invoice number. Okay. So let us go back to our slide where we are learning about the debit note and credit note. Right. Hope you have understood this point. When there is reduction in the taxable amount, then seller will issue the credit note. Okay. Now what will happen if the tax rates are increased on the same goods with effect from 1st June? ABC will issue a debit note. It is as easy as that. But with the reference number, this is very, very, very important. Reference number, this. Hope this is clear. Debit note and credit note. Okay. 5 marks question can be asked on debit note and credit note. Explain how it works and what are its contents. Contents are same. In the debit note and credit note, there are same contents which you have seen in the tax invoices. Okay. This is very, very important. Now there is a penalty of not issuing the invoices or debit note or credit note. They have to, registered person, they have to comply with the law, and that law says incorrect invoicing. If you are giving incorrect invoices, then penalty of rupees 25,000 can be imposed on such invoice issuer. Penalty for not issuing invoice: you have made the transaction but you are not issuing invoices, then penalty of 100% of tax due, whatever transaction is happening, 100% of that tax due, or rupees 10,000, whichever is higher. It means minimum 10,000 you have to pay as penalty. Okay, so that's all about penalties and tax invoices. Different types of taxes we have seen, bill of supply we have seen, and debit note and credit note. Hope this is clear. Any doubts and clarifications, you can however comment below. Okay, see you next video. And let me also tell you, RCU students, this ends your unit number 3 completely. Okay, see you next video. Thank you.